Welcome to FX Tech's comprehensive gold market analysis for November 3rd through 8th, 2025. This week witnessed a critical battle for the $4,000 level as gold prices consolidated following the historic rally. Our in-depth analysis examines key technical levels, fundamental drivers, and expert opinions from 5 major financial platforms. We'll explore why gold is struggling to maintain momentum, what the Federal Reserve's latest decisions mean for precious metals, and how U.S.-China trade dynamics are reshaping market sentiment. Whether you're a short-term trader or long-term investor, this report provides actionable insights and clear strategies for navigating gold's current crossroads. Prepared on November 10th, 2025, this analysis synthesizes data from TradingView, InvestingLive, ActionForex, Forex.com, and DailyForex to give you the complete picture. Gold experienced a volatile week, oscillating around the critical $4,000 psychological level. The week opened at $3,993 and closed at $3,966, representing a modest weekly decline of 0.7%. Intraday volatility was significant, with prices ranging from a low of $3,929 to a high of $4,036. This $107 trading range reflects intense indecision as bulls and bears battle for control. Despite the weekly pullback, gold maintains an impressive year-to-date gain of 52%, one of the strongest annual performances on record. The market is clearly at an inflection point, with the $4,000 level serving as the fulcrum. Multiple attempts to break decisively above or below this level have failed, suggesting a period of consolidation may be necessary before the next directional move emerges. From a technical perspective, gold is trading in a well-defined range with clear support and resistance levels. The most critical resistance sits at $4,040, followed by the Fibonacci 38.2% retracement at $4,760. A decisive break above 4,125 would signal renewed bullish momentum. On the downside, immediate support lies at $3,950, with stronger support at $3,920 and the week's low of $3,929. The psychological $4,000 level has been tested multiple times from both directions, making it the key battleground. The 50-day exponential moving average at 3,872 provides crucial medium-term support. A break below 3,800 would raise serious concerns about the uptrend's integrity. Technical indicators suggest gold is neither oversold nor overbought, reflecting the current state of equilibrium and indecision in the market. 5 key fundamental factors are shaping gold's current trajectory. First, Federal Reserve policy remains paramount. The Fed delivered an expected 25 basis point rate cut, but adopted a less dovish tone than markets anticipated, reducing gold's appeal. Second, U.S.-China trade relations have shown signs of improvement, with both nations engaging in constructive dialogue. This easing of tensions has reduced safe haven demand for gold. Third, U.S. dollar strength continues to pressure gold prices, with the greenback rallying post-FOMC meeting. The negative 0.7 correlation between gold and the dollar is clearly evident. Fourth, Treasury yields have stabilized around 4%, increasing the opportunity cost of holding non-yielding gold. Finally, central bank buying and ETF inflows remain supportive, with September seeing record inflows of 150 tons. These conflicting forces explain gold's current consolidation pattern as the market weighs dovish policy against reduced geopolitical risk premiums. Market sentiment is decidedly mixed, with experts divided on gold's near-term direction. Forex.com analysts note that gold is grasping at $4,000 as consolidation continues, emphasizing the importance of this psychological level. They observe that improved risk appetite has temporarily reduced safe haven demand. ActionForex's FX Pro team warns that the correction is not over yet, drawing parallels to historical consolidation periods in 1979 and 2011. They suggest gold may need several weeks or months to digest recent gains. DailyForex analysts are focused on the Federal Reserve's rate path, noting that gold is holding the $4,000 level as traders eye Fed policy. InvestingLive highlights the battle between bulls and bears, with gold falling hard then rebounding as neither side gains control. TradingView community sentiment is split, with some traders seeing buying opportunities while others anticipate further weakness before resuming the uptrend. Market sentiment is decidedly mixed, with experts divided on gold's near-term direction. Forex.com analysts note that gold is grasping at $4,000 as consolidation continues, emphasizing the importance of this psychological level. They observe that improved risk appetite has temporarily reduced safe haven demand. ActionForex's FX Pro team warns that the correction is not over yet, drawing parallels to historical consolidation periods in 1979 and 2011. They suggest gold may need several weeks or months to digest recent gains. DailyForex analysts are focused on the Federal Reserve's rate path, noting that gold is holding the $4,000 level as traders eye Fed policy. InvestingLive highlights the battle between bulls and bears, with gold falling hard, then rebounding as neither side gains control. TradingView community sentiment is split, with some traders seeing buying opportunities while others anticipate further weakness before resuming the uptrend. We've developed tailored strategies for 4 trader profiles. Short-term traders should employ range trading tactics, buying between $3,900 and $3,920 and selling between $3,990 and $4,000. Use tight stops and target 2 to 3% gains. Swing traders should wait for clear breakouts, entering long above $4,040, targeting $4,150 to $4,200, or entering short below $3,900 with targets at $3,800. Medium-term investors should employ a layered buying approach. Allocate 25% at current levels, 35% if gold dips to $3,850 to $3,900, and 40% at $3,700 to $3,800. Target gains of 10 to 25% over 3 months. Long-term investors should use dollar-cost averaging combined with opportunistic dip buying, viewing any pullback to $3,700 as a strategic entry point. Target $4,500 to $5,000 over 6 to 12 months. Gold stands at a critical crossroads. The $4,000 level has proven to be a formidable battleground, with neither bulls nor bears able to establish dominance. Several key takeaways emerge from our analysis. First, $4,000 is the line in the sand that will determine the next major move. Second, bullish catalysts are fading as U.S.-China tensions ease and the Fed adopts a less dovish stance. Third, dollar strength remains the primary headwind. Fourth, Fed policy clarity will provide the next catalyst. Fifth, historical patterns suggest an extended consolidation is likely. Sixth, the long-term bull market remains intact above 3,700. Looking ahead, expect short-term range trading between 3,900 and 4,100, medium-term consolidation between 3,700 and 4,300, and long-term targets of $4,500 to $5,000. Patient, disciplined investors who buy weakness will likely be rewarded as gold resumes its upward trajectory.